Good afternoon, everyone. Thank you for joining us for our Business Connect webinar today. It's an Access to Finance webinar. And I just want to let you all know that today we are Realise Business, but this webinar is funded by the New South Wales Government through the Business Connect program. And thank you for joining us this morning for our webinar with our expert speaker, Amy Chen, and it's titled, Should I Borrow to Support My Business During the COVID-19 Disruption? So just before we get started, just a couple of quick housekeeping rules. Please make sure that you're all on mute. Courtney, our events manager, will mute you, but just if you can also just double check that you've got your screen on mute today. Use the chat box to ask questions, and you can find the chat box in the bottom right hand side of your screen. Just click on the chat box and ask a question throughout the presentation. We'll answer them all at the end, but ask them as you think of them, that's fine. And then let us know if you have any audio or video issues, and just type that into the chat box as well. Courtney will be reading the chat box throughout the session. And finally, the session's being recorded, and we will send you a recording of the session at the either this afternoon or tomorrow. So we are Realise Business, and we deliver a lot of our services through the state government, New South Wales Government Business Connect program. So we're a not-for-profit established in 1989, and we've worked with over 20,000 businesses during that time. We're 30 years old, and we're funded by the state government to provide low-cost advisory services to business through the Business Connect program. And most importantly, we empower people to successfully run a business. So now I'm going to introduce you to our presenter, Amy Chen. Amy is also our finance advisor at Realise Business. So you can access business advice through Amy through the Business Connect program. Amy's going to share with you everything she knows on the subject today. But if you wanted to catch up with Amy at another time, just reach out to Courtney when she sends you your webinar recording, and Courtney will be happy to schedule in an appointment with Amy. So I'm going to hand you over to Amy now to run you into the webinar, and Amy's going to tell you a bit more about what her specialisation is in the finance industry. So welcome, Amy.
Thank you, Jacqueline, and thank you everyone for joining us today. As Jacqueline mentioned, I'm one of the Business Connect advisors, and what I focus on is helping businesses with the financial aspects of what they do. Things like planning their cash flow, analysing and managing their costs so they get a better sense of what their profit, or what they need to improve their profits, and helping owners prepare their business if they wanted to borrow in the future. So before I worked for Business Connect, for Realise Business and under the Business Connect program, I worked for a very long time in lending and banking. So I worked with businesses that are big and small, across lots of industries, and both here and overseas as well. So my focus is very much for making sure that you as business owners are on top of your financials and numbers, and that you've got the right tools and you've got the confidence to make the right decisions for your business. Yeah. Okay, so let's get started on today's webinar. So what we're going to talk about today is, should I borrow to support my small business during the COVID disruption? Now, as you could imagine, the disruption we've experienced so far in the last couple of weeks has been pretty much unprecedented, and it's put lots of pressure on the cash flow of lots and lots of businesses. And for those of us who are really exhausting all the resources that we've got, how do we decide on whether more debt is the right thing to do to get us through this period of disruption? So the types of things that we're going to run through today are, what do you do if you're already struggling with the money, with the debt that you've already got? What support is there available under the through the government supporting the flow of credit initiative? So that came out through the federal government's economic stimulus packages. Should I take on more debt to get me through? And how do I decide how much I need? Okay, so
Amy,
Um,
sorry, can I just interrupt quickly? I can hear you well, but a couple of people have asked if you could speak a little bit louder or closer to the microphone. So I'm not sure.
all right, I'll
Yeah,
hold
just
the
good to make you
microphone a
aware.
little bit closer. I'm just going to, okay. Now,
Thank you.
just a disclaimer, and to get this out of the way, as with anything to do with accounts and finance, I need to mention that what we're discussing today is general in nature, that before you make any changes that could affect your financial position, you should really seek the right advice, because your personal and your business circumstances are going to be different to everyone else's. Okay, so the first thing we're going to cover is, what do I do if I'm struggling with the debt I already have? So you're not alone, basically, if you're experiencing pressure on your cash flow. So all lenders are getting phone calls about the same thing from businesses everywhere. The figures I heard this morning when Anna Bligh, who's the CEO of the Australian Bankers Association, in her press conference this morning, it's an estimate, they estimated 643,000 borrowers have asked for deferrals on their loans. And at least 100,000 of those requests came through in the last week or so. There is a mix of personal debt in that. So at least half of them were people's personal mortgages. But there was also a significant portion of business loans included in that figure as well. So if you're experiencing pressure on your cash flow and struggling, what should you do if you've got loan repayments that you can't repay? Now, your credit profile is probably not the most important thing to you right now, but stopping your payments without speaking to your lender is something you really should avoid. What you want to do is avoid something like a missed payment, a late payment, or a default, because those types of things get recorded on your credit profile. As I mentioned, not the most important thing to you right now, but it could make your life very difficult if you wanted to borrow money further down the track in the future. Okay. As a guide, the things that do get reported are amounts over $150 if they're outstanding for more than 60 days. Okay. So if you're struggling to make repayments, any kind of repayment on your loans because your business has taken a hit, speak to your lender and try and speak to them as early as you can. And then what you need to do is come to an arrangement. As I mentioned, most banks are offering 6 months deferment on payments, but just make sure it's an arrangement that you can manage. What the other thing I want to reiterate is, again, there's 600 odd thousand people have reached out to their lenders. So again, don't be ashamed. Just speak to your lender and talk about what you can and can't repay. And the other thing is that what you do want to make sure is that you stay in compliance with the terms of your loans. And that means until you come to arrangements, and they should come through fairly quickly, that you do continue to make payments until there's an agreement in place. As I mentioned, there are long-term implications that could affect your credit score and your ability to borrow money in the future. Now, I'm not going to talk a lot about this today because we're focusing on what the loans are and whether you should borrow. But if you did want to find out about the way a credit score can affect your ability to borrow, there's an article I wrote for Smart Company a while back. The link's there, and it just explains to you on the types of things that you can do to sort of, improve the credit profile, your credit score, or at the very least, maintain it. And it kind of goes into, the things they look at and, even what a credit score is, because not a lot of people sort of think too much about it. Now, the other thing I wanted to mention is that the same hardship stuff applies for utility companies as well. So again, not paying your utilities can affect your credit score. And so again, not dissimilar to what you would speak to a lender about. If you're struggling to pay things like your gas or your power, again, talk to them about an arrangement of some sort. I do remember early on in the piece, the AER, the Australian Energy Regulator, had came up and said their providers are prepared to negotiate with businesses, particularly ones with high power usage, about ways that they can meet their power costs. That kind of, does give you a little bit more relief in terms of your cash flow. Now, what you see on the screen now is other forms of cash flow relief other than relief on your debt repayments that are available from lenders. I'm not going to go through each and every one of them individually, but you get a sense that there are initiatives in place from your bank or from your lender where you can get a little bit more relief on the type of fees that you're used to paying, like, your EFTPOS fees and your credit card fees, and having redraws available to you as well. So this, the points that you see on the screen are basically things I picked off the Big Four websites. Now, when you're looking into this stuff, check what your lender or your bank's providing and check what's applicable to your business. Okay, so this is just to give you a sense that there are rate reductions, there are fee waivers going on. So have a look at what applies to you. Okay, so the next session, the next part will be we've heard about, the government providing support for small business. What are these programs? Okay, and how do they help you? All right, so there's two aspects that we'll talk about that are probably more relevant for small business. The first one is the Coronavirus SME Guarantee Scheme, which is probably the key one, and there's also quick and efficient access to credit for small business. Now, when we have a look at the Coronavirus SME Guarantee Scheme, this is something that's basically designed to help small businesses access loans. Basically, you need to turn over less than 50 million. And it's basically providing, giving access to small loans to small business. They call them unsecured. And therefore up to $250,000, and they go for a term of 3 years, and you've got 6 months payment relief. Now, there are also concessional interest rates and fees. I'm pretty sure I've written for the first 6 months only. I'm not actually sure about that, and I will talk about that in terms of things that you need to check when you look into these loans. Now, they will be in the form what they call unsecured finance, so you don't have to pledge any security on it, but you will need to provide a personal guarantee, and I'll go into that a little bit later on. So conditions of loans. Now, I've had lots of questions about these loans, so I'm just going to outline the a broad summary of what these loans are for. These loans are for current business purposes only. Okay, so these are basically to help you meet the operating costs of your business while your sales might be down. They're not for the purchase of new equipment. So if you got your own new piece of kit, not really what these loans are for. And I've had a lot of questions about people with relatively high interest rate facilities. Can they use these loans to refinance those and make it cheaper? No, is the short answer to that. Okay, so this initiative is really really to support businesses through this period, rather than an opportunistic thing to try and reduce your costs at the moment. The other thing is, as I mentioned before, you need to check if you do choose to take out one of these loans, check what your repayments are and what the interest rates are that are applicable to these loans. I think they're offering a low introductory rate, but it's an introductory rate. It's going to change at some point. Now, as there's lots of loan deferrals at the moment, and it is really helpful for a lot of businesses who don't have the current cash to pay their bills. Okay. Now, what happens when you defer these your loan payments is that for the amount that you haven't paid, you will be charged interest on that amount. That interest will be added onto that total loan amount. and then interest for the next month will be calculated on that higher loan amount. Okay, so the longer you defer your payments, the more you're going to have to repay. What I do tell people is that if they're not sure they're not sure of the cash flow they've got coming in, I suggested that they ask for a deferral to give you a cushion, but do continue to make the payments, because in the long run, you're going to pay a lot less for your loan. The second aspect of the stimulus package is quick and efficient access to credit for small business. Now, this basically means that the government's going to relax the responsible lending obligations for lenders for the next 6 months. So the idea is that you're going to be able to access new and increased loans more quickly and efficiently without having to go through their standard processes. So in theory, there should be less red tape, and it should be quicker to get an approval. But I do want to reiterate that while there's a relaxing of these standards, ultimately it's up to you. You're the one responsible for this debt. Okay, the responsibility is on you to decide whether you're going to be able to repay it. Okay, so yes, it's easier to get a loan, but at the end of the day, you need to think about, whether it's a good idea for you and your business to do so. All right, so those are the types of things you need to think about when it comes to those are the things that's on offer in terms of support for small business loans under the stimulus packages. Now, the question is, should I take on more debt to get me through? And that decision is always going to be up to you. A lot of businesses I know don't want to take on any more debt, and I don't blame them, and I don't necessarily recommend it in a lot of cases. But we're going to go through some factors that you should consider in your decision-making process. Okay, so as I flagged earlier, these SME loans do require a personal guarantee. The idea is the government has offered, they've offered to guarantee 50% of the loan, but you will also need to provide a personal guarantee for these loans. And the order of liquidation, so basically if you can't repay these loans, they will go after your guarantee first before they get the money recouped from the government. So whatever they can't get from you, they will ask the government for. Okay, so that's something to be wary about. I don't think it specifically says on lenders' websites there's a personal guarantee, but I'm not surprised. Actually, I think it's not that I think it's appropriate, but it's not surprising to me that they've asked for a personal guarantee or a director's guarantee. The other thing is, while it's part of the stimulus package, it's not free money. It needs to be repaid. And 3 years is actually not a long time to repay a loan. So before you decide to increase the your debt load, you need to do enough planning around what your cash flow looks like now, and also what you think it's going to be. Well, it's quite hard to predict at the moment. After the lockdowns get lifted, and you need to have reasonable amount of confidence that you can repay what you borrow. So you basically need an exit strategy. Now, I recommend you only borrow what you need. So the way these loans are structured is they're think of it like a line of credit. Okay, so, and in fact, the government's encouraging lenders to provide these on like a drawdown as need basis. So that means that you will only pay interest on the amount that you borrow. You don't pay interest on the amount you haven't drawn. And you have the flexibility to draw down more funds if you need them. As I said, these loans, there's some businesses I've spoken to who aren't sure whether they need to borrow. And what I've basically, you don't need, even if you apply for these loans, you don't have to draw on them. You do need to check on what fees you'd have to pay if you just had it as a standby line. But again, you can use these things. It's a contingency that you can have in place for your business. Okay. Um, the other, I mean, like in terms of whether you decide to borrow, okay, what you might want to do is set a milestone for your business or an event that needs to happen before you decide you want to use these loans. And an example I'll give is that a client I was recently working with, in order to get their products produced, they need to outlay a lot of cash to get these products manufactured overseas. So their milestone is, they weren't going to borrow, they weren't going to draw on these loans until they received a confirmed purchase order. So again, like think of what milestones you can set for your business, like, what events need to happen for you to have certainty that when you borrow, when you use these loans and you borrow, that you're going to have the cash coming in to repay you. Now, we ran through these points earlier. These loans are for existing businesses only, and they're to be used for existing operations. Okay, it's not really for new business opportunities. And I know the interest rates look tempting, but they're not supposed to be used to refinance your loans. And it's actually, I find it's really important that you're clear on the conditions on these loans. The one thing, if your lender does find out you've breached these conditions and used the funds they weren't intended for, technically you're in breach of the conditions of your loans, and you risk incurring penalties, and you risk having a breach or a default recorded on your credit profile, and you could be asked to repay these loans and what you've borrowed immediately. So again, these are just things you need to consider, okay, when you take out these loans. Now, how much do you need and how long will it take you to pay it back, which will be this slide here. Now, there's some planning and there's going to be a spreadsheet involved, so I warn you now, okay? So, and it really, when you do a cash flow forecast, it's really the only way I find to really see clearly what your path is going to be in terms of trying to work out how much you need, how long you need it, and how you're going to repay it. Okay, so again, I say you need to plan your cash flow because you can really, you don't, unless you have everything in front of you, you're not going to be able to make an informed decisions based on fact. Okay, so taking the time to outline your cash position will help you sort of work, it clarifies your thinking to some extent because everything's in one place in front of you. You can see what cash you've got coming in and then what you have to pay. You can work out how much cash you'll need, and then you can form a plan of action from there. Okay. Now, a sample is, and I've run workshops on how to do a cash flow forecast on these before, so you don't need anything complicated. This spreadsheet is available from the business.gov.au site. I've just customized it a little bit because I've got OCD and I'm a bit fussy about things, but all it does is take how much money you've got in the bank. It adds what cash you've got coming in for the month, what you need to pay away, and then you end up at a closing balance. So if you look at the bottom line, I'm pointing at it, but you can't actually see me pointing at it. If you look at the bottom line down here, closing balance, these negative numbers, so you see this negative 23,000 here, that's how much cash you'll need to cover what you think your expenses will be. Okay, so this gives you, this type of exercise will give you an indication of how much you're going to be short by. Okay, so that'll work out how much you need. I would say add a bit of a buffer. Again, you don't know what's going to happen. Add a little bit of a buffer to the amount you ask for. You don't have to ask for the full 250, as you hopefully you know, but add a buffer to that. Again, cushion, again, less stress. You've got a contingency in place. And also these lines down the bottom where you put loan repayments, you need to factor the payment of this new loan in the future when you go out further to the right. Okay, so that's a way of seeing how much you need for how long and all that. Now, in terms of looking at these cash outgoings, these lines, because it's all in one spreadsheet, you can kind of see when you're going to be really short on money and what you need to do in the months leading up to it. You know, do you need to negotiate your rent down? You know, are there things that you can cut back on cost-wise that aren't essential at the moment? Okay, so again, a cash flow not only tells you how much you need and for how long, it can be a planning tool in terms of you working out what you need to do for your business to try and reduce costs, because again, all the numbers are in front of you. You can see exactly what there is. So that is a wonderful spreadsheet. And again, that template is available. That's the link there. It is available on the business.gov.au website. In terms of what you need to do that spreadsheet, information-wise, it's just a list of everything you need to pay and when you need to pay it. So it's the when you need to pay it, that's quite critical. A list of what, I mean, at the moment, tax is being deferred. So that's another thing that you can ask for a deferral for. The ATO sort of allowing more deferments on tax payments at the moment. So a list of what tax you need to pay, what loan payments you need to pay. Now, your forecast, what you put in that spreadsheet, it's only going to produce you information that's useful if you put things that are useful into it. Okay, so try and be realistic. Okay, try and be realistic. Try and be close-ish to the mark. It's not about getting it right to the dollar. It's about giving you an indication of where your business, where your cash position is going to be sat at a certain point in time, and things will shift over time, and you'll need to rejig it. Okay, so it's very much about timing, when cash comes into your bank account, when cash leaves your bank account. Okay, it's not so much about what the profit equation is going to be. All right, so I think we went through these points earlier. Having all the information in front of you helps you clarify your thinking. It helps you formulate a strategy. Okay, so, and it makes you think a little bit more laterally about the business and what you can do. Again, payment plans are a big one. Deferring payments are a big one. Speaking to your landlord about your rent's a big one at the moment. But then it's also, have you got assets you're not using at the moment that you can sell? You know, have you got space that you can rent out to people? It's about thinking what you can do to generate cash in under the current circumstances. So, and again, the key is planning, because the earlier you plan and the earlier you ask for things to, the earlier you ask for a payment arrangement, the less urgency there's going to be for you. And the more likely things will be work out in your favor. So say you decided to put an asset up for sale. If you've got longer to sell that asset, you don't have to fire sale it. You know, you don't have to sell it at a discount because you're desperate for cash to come in to pay your wages. Okay, so again, plan ahead. See the cash flow as a way of planning the business and what you need to do in the lead up to, you know, to what you can see happening in a couple of months' time. All right, we're almost there. Now, key takeaways. So what are the things that you can do? You know, what are the key things that you want to think about after this webinar? Plan your cash, which we went through in quite detail then. It's about working out what your cash position is going to be. A lot of businesses I speak to know things are bad, but and when I ask them, okay, so you've got this amount of cash at the moment, how long is that going to last you? And they don't know. Okay, so it's worth sitting down and working out how much you've got, what you've got, how long it's going to last you, because then you can plan. It's only with planning that you can, you know, you're not flying by the seat of your pants. You've got a plan in place to make sure you're going to be there when COVID-19 sort of starts to lift and things go sort of back to normal. Okay. Planning your cash also means that because you see everything in front of you, you can look at what opportunities you've got to generate cash and also minimize expenses. Again, negotiate early with suppliers and lenders if you need to. That includes things like utilities. And, you know, if you can put off some tax payments to the ATO, that's going to help your cash position a hell of a lot. Give yourself a buffer. So once you've worked out how much you need, give yourself a little bit of leeway in that. And then work out, if you do end up taking a loan, work out how you're going to repay it and how long it's going to take you. Okay, so ultimately that repayment piece is quite critical in terms of whether you decide to take a loan or not. Talk to your lenders early. All right, see what relief there is aside from loan deferments. As I said, a lot of FPOS fees are being waived at the moment. A lot of high caps is being waived for those of you who are health practitioners. Negotiate an arrangement. As I mentioned, there's thousands and thousands of businesses and people who have asked for arrangements. And then keep meeting your obligations and continue making repayments. And as an ex-lender, I can tell you now, it was a lot easier helping a customer if they came to you early. If someone came to you at the last minute, the options are a lot less. Okay, so it's the earlier you speak to lenders and banks, the more options you're going to have available to you. All right, if you do need to borrow, if you do make that decision, now do check the borrowing conditions and your loan conditions and the repayment terms. Please do check what interest rates are applicable and what fees are applicable, particularly after the first 6 months. That's the one thing, there's a lot written about what's available for the deferral period. I haven't seen a lot of transparency in terms of what will happen for the balance of the 2.5 years. So, and to be honest with you, I don't think banks and lenders themselves know. Only borrow what you need to keep your business going. And the other thing is, make sure you get the advice you need and you understand what you're signing up for. So you understand what obligations and what responsibilities you have by taking this loan. Okay. I think final thoughts. Oh, we won't. Jacqueline, were we going to take questions before I give you my final thoughts?
Happy to do that, Amy. Do you want to go to questions now? That's a good idea.
We can go to questions and then we can sum up my thought. Actually, I'll take this. I'll take the page off. So there you go.
We've got quite a few questions already come through. So
okay.
I'll ask you, and I've got a couple of questions myself that I wanted to ask you, but I'll start with first question we had was from Dorota. I'm sorry if I said that wrong. Would you have any more details about interest rates on these loans?
No, you need to go to your lender, and it's going to vary between lenders as well. Okay, so as I mentioned, there's introductory rates. From what I've seen, the introductory rates are slightly different across lenders. It depends on who your lender is and and do a comparison. Ring a couple of lenders, get a comparison. I always say to people, speak to at least 2 banks or lenders and compare. Okay, don't just go. It's easy to go to your existing lender because you have a relationship with them. They know your account conduct, but do go to an alternate lender. So I can't give you any transparency. I don't even know what the interest rates are, to be honest with you, and I will not. I don't think there's any circumstance I would give you any advice on interest rates themselves. So it's a matter of, and interest rates will fluctuate according to what the market's doing anyway. Okay, so yeah, it's a matter of going to the lenders and seeing what's on offer.
And just a reminder to everyone, if you've got any questions or you'd like to ask anything, just type it into the chat box as we're going. Next question from Eric. Is a business with a business of 9 months, would they be eligible?
I think you would be under the COVID loans. That's another question. I'm not sure. Usually the magic number for businesses in operations is 2 years. But you need to, I think it's a matter of asking the question. Okay. I'm not certain because it's an interesting question actually, because it's not one I've been asked to date. Um, the idea of these loans and the reason the government's put their guarantee behind it is that they want businesses to survive this, and they want to give you as much help as possible. But if you're a business of 9 months, and every business is going to be different. If you're a business 9 months old, just make sure you're confident that you are able to repay these loans. Okay. One of the reasons is lenders are typically reluctant to lend to businesses that haven't been established is, again, track record, and then track record of earning, which is why sort of the younger, newer established businesses struggle with finance a little bit more.
Okay, good answer. Sonia is asking, this is an interesting question actually. So Sonia is saying that, does that mean that she can't borrow for new software that will assist her business to move forward as the current software is unsupported?
Depends. That's a decision she needs to make for herself. It'll depend on how much the software is. Okay, now asset purchases, we're talking about big pieces of kit, like, you know, a forklift or something like that. You know, if it's software, it really depends on the cost of the software. If it's a software that, if it's a cost that you would incur in the normal operations of your business, it may well be okay, but do double check with your lender. I don't want to give a yes or no. You know, think of whether it's some, if you believe it's in the course of the normal operations of your business, and that, you know, it's going to assist you through this period, there could be leeway on that. But I can't give you a definitive answer because I don't quite know all the facts around it, because there's a lot of factors. Lending, a lot of this stuff, and I know people want yes or no answers. I can't give you yes or no answers because there's lots of grey. It depends on your circumstances. It depends on what the numbers look like, you know. It depends on the cost of the software relative to the rest of your expense base. It depends on whether it's something that you put on your balance sheet as an asset. You know, there's lots of grey in these types of things. I'm not sure that answered Sonia's question. I'm sorry, but I can't give you a yes or no if that was what you were after.
And I think it might be similar to the next question we have from Nikos, which is, can the unsecured loan be used for digital marketing and to become an NDIS provider, as such actions can help the company to increase future cash flow?
It will, again, another grey area. It depends on the nature of the spend. I think what they look. I think having these packages were rushed out, as you know. The lenders and the government didn't have a lot of time to put these things together. So there's lots of grey areas that they tried to cover as much as they could. But there's lots of grey areas in between. What they didn't want people doing is buying new vehicles, buying new forklifts, buying new trucks that would normally be subject to a finance lease. Okay, so again, grey area, I'm not certain. And again, don't know about the circumstances around your business, around your expense base, whether something gets capitalized, like something gets capitalized on your balance sheet. So again, lots of grey, and it's something that you sort of need to discuss with someone who knows something about it.
Yeah, and then would that be the same? Nikos is also asking, what about for additional employees, like admin, salespeople? Would they be classified, you know, as part of the COVID?
In terms of whether just salaries and people and contractors,
like to hire additional people, yeah.
I can't see that as a new asset. I would see that as operating in the course of things. I would see that as an operating expense personally, but you know, and as if I was lending, I would see it that way. But even that's the thing is, even lenders are different. It depends on what banker you get, and it's similar to what tax agent you get, right? People are going to interpret things in different ways. I'll go to one accountant and say, can I deduct this? I'll go, yeah. And I'll go to a different accountant and go, can I deduct this? They'll be like, no. Do you know what I mean? It's unfortunately sometimes there's no, it depends on who literally picks up the file sometimes. But if you can mount enough argument to say this is an operating expense, is for me to run, and not, in fairness, a lot of businesses have experienced decline, not all. Some businesses are doing okay. Some businesses are in a growth phase because they're funded in a different way. So if hiring a new person is the right thing to do for your business right now, then it's a normal operating cost you would incur, I would think.
Mm.
I do need to say I'm not an accountant, okay, so I don't know the strict rules about accounting or tax, okay. And I have a bit of knowledge, but I'm not actually an accountant.
And Nikos, just on that, you're probably aware, but we do have a few specialist NDIS business advisors on our team. So if you had any questions on that, or you wanted to speak to someone, just let Courtney know as well, because we can put you in touch with someone to help you with that side of things if you're interested. And we have a question from Pam. So Pam is asking, besides the big 5 banks, who else would you recommend we approach for a loan? And do Realise Business work with any lenders who we would recommend? So, no, we don't. I'll answer that one.
I don't recommend them either. Look, when I worked for a bank, honestly, it was, what color was your business card? Like, there was actually no differentiation between them. I don't necessarily recommend a bank. What I do recommend that you talk to a couple, see what comes out of it, and pick the option that works for you, because their products do work slightly differently. So it really depends on what product you're after and what the terms and conditions are. Because sometimes, pre-COVID, some banks had different structures for different industries and different loans, different lending ratios. So one bank might work really well for one industry, but not work so well for another. Okay, I'm giving the most waffly grey answers that don't stray away from actually giving anything definitive. But that's what this sector is. It's about looking at what your business actually requires. I find the big 4 are not too different from each other. I don't know who the 5th one is, if I'm honest with you. But I don't, the reason I always go by the big 4 is their credit rating is sort of better than some of the other lenders, and their cost of funds, the way they fund themselves and the way they borrow is cheaper than the other lenders. Okay, so that's why I usually reference the big 4 because they've got the broadest product range. Big 4 doesn't work for everyone. I don't know about the credit unions and whatnot, but I do know from my time when I worked on the capital side of the banks is that because their credit rating is a lot stronger than some of the other lenders, they can access funding and money cheaper because they're a stronger organisation, which is a whole different discussion, really. You didn't really need to know all of that.
So Dorota has also asked, how much would a business be able to borrow? And would it be a percentage of turnover?
Look, under the COVID loans, it's a loan up to $250,000. In terms of how much you should borrow, it's going to depend. It's hard to go with a turnover number because I don't know what your cost of goods are going to be. I don't know what your operation costs are going to be. Okay, so it's lots of factors go into that. Again, go through the exercise of working out how much cash you'll end up at the end of every month, and then you're going to end up with a number which you're going to be short by, and that's probably the number to go for. Even, again, in the olden days when I worked for a bank, lending ratios for banks, we would do an EBITDA multiple, like EBIT as in earnings before interest, tax, depreciation and amortization. Those multiples would be different across different businesses. Like, some you'd lend 2 times earnings. Sometimes you would lend, actually EBITDA is a bit different from turnover. So it'll be multiple as opposed to a percentage. But it's again, very difficult question. It's very bespoke to what your business is. And even across businesses in the same industry, depends on what structure you've got in place. Okay. So again, I can't put a definitive percentage on that without looking at financials and knowing what you do and what your cost base is like.
Okay, a question from Christopher. Does the government grant work for an overdraft loan, or would it just be standard finance?
I've seen this when some of my clients have come back with what's from their discussions with their lenders. The SME guarantee loans are separate to an overdraft. Okay, so lots of lenders, if you have an existing overdraft, they will they're prepared to they call it a temporary excess, but they're prepared to increase that overdraft limit for you to support you through that business. The key thing to look, and overdrafts are normally unsecured off the top of my head, but the key thing to look at with the overdraft is what interest rate is applicable. Now, the overdraft should be on demand and it should be redrawable. Thing with overdrafts is they can pull it at any stage. So you may need to repay it on demand, and overdrafts are typically renewed every 12 months. So there's not always certainty that you're going to have it for another 12 months. The SME loans are only available until September. Okay. What I don't know, because I've not seen any lending documents on these loans, is how long that drawdown period is going to be. So does that, at what point are drawings on those loans cease, if you know what I mean? So overdraft and these SME loans are slightly different. They could, in theory, they operate the same, in which, there's no repayment for an overdraft, but you can draw these as you need them. Okay, so it's an on-demand facility for 3 months until September.
Thanks, Amy. Probably just a couple more questions. I think we've got, last question we've got on the chat is from Nikos, and Nikos is asking what does a personal guarantee mean?
Okay. Personal guarantee is you saying you saying to the bank, well, a guarantee basically says you will repay the bank. If your business can't repay it, you personally will repay it. Okay, so personal guarantees are not uncommon with small business loans. So it's, look, and banks call that's something that I thought I was going to touch on and didn't. Now, the banks see these loans as unsecured. To us as small business owners, it is secured because we're providing a guarantee. So you're providing a surety to the bank that, even if your business goes bust, even if you have to liquidate, that you are still personally responsible to repay that loan. Okay, so that's what a personal guarantee is. Lots of people don't like providing personal guarantees for business purposes because the idea is to separate the two. Certainly with the small business, a lot of the small business lending I've seen, the personal guarantee is usually a given. Okay, so basically you're personally responsible for that debt.
Okay, and I think we'll make this the last question, Amy. It's actually a question from me. What happens if I'm not in a position to go back to the normal loan repayments after 6 months?
I think banks are actually preparing for this eventuality. And what I understand when I heard Anna Bligh speak this morning is that they are starting to talk to the regulator, so APRA, the prudential regulator, about what they're going to do when you can't, when the 6-month deferral period ends and you're not in a position to make these payments. Again, my suggestion is talk to your lender early and come to an arrangement. I think there is the anticipation that lots of borrowers will not be able to go back to their normal payment patterns. Okay, so the lenders are prepared for it. So I would, again, talk to them early and find out what arrangements work out what you can afford to repay and come to an arrangement with your lender. I think from what I understand, the industry is preparing for a lot of these lenders to look. The deferral was to give you relief for 6 months, and I think it was a matter of let's see what happens after 6 months, because they wouldn't have wanted to commit more than 6 months. So don't think that at the end of this 6 months, it all goes back to normal, because I don't think that's going to be the case. I think if you've got the cash, do make a payment of some sort, because the longer you put stuff off, the more it's going to cost you. But again, again, I've said again 300 times, don't stress yourself out too much. It's about what you can afford and what arrangements you can come to the bank. And the banks will, I say banks, lenders are anticipating these types of conversations in 6 months' time, or I think probably September. Okay, so this is the time where you work on what you think you can afford in September. And it's really, it's things have changed so much that, it is actually quite hard to have some sort of visibility of what position you're going to be in September. Okay.
Okay, look, Bev, we did just get one more question, Amy, which I think is a good question. It's from Nikos, and Nikos wanted to know, did you say that we get
questions, haven't we?
Did you say that we get charged only on the amount we use? For example, if we borrow 100,000 but we only use 50,000, will we only be charged for that 50?
That's my understanding. That's the way these COVID loans, that's the way they're supposed to work, because you can't be charged interest on something you haven't borrowed. The way banks operate is that sometimes they have to allocate capital for the undrawn portion. So what I would suggest you look for is some sort of line fee. I don't think they're going to be applicable to these loans, but you do need to look at whether there's some sort of unused fee in there. But you would only ever be charged on interest on things that on amounts that you've actually borrowed. I mean, I don't think you could. I don't think it's ethical to charge you interest on stuff that you haven't actually taken out.
All right, thanks for that, Amy. And we'll throw to your final thoughts. Do you have any final thoughts?
Oh yeah, my dignified final thoughts, of course. Okay, now again, I think I've ducked every question and not given an actual answer to every question. But again, no question's a silly one. They have been all really, they've been good questions. Lots of grey areas. So, it's about asking, if you're struggling with something, ask for help, like ask your accountant, ask your bookkeeper. It's going to, what you want is enough information for you to make an educated decision on. And again, the planning is key, and understanding your numbers is key as well, because it may well mean the difference. If you thought you had cash to last you 3 months, last you 6 months, and only lasted you 3 because you didn't plan ahead, that can make all the difference, that planning exercise. And it's not necessarily the most pleasant exercise you're going to do, but it could actually make the difference between whether you're still around in 6 months as opposed to 3. Okay, so it's just a tool. And then, as I mentioned, get as much help as you need. The Business Connect program's available to all businesses at the moment without fees, I believe, Jacqueline.
That's correct.
Yeah, so, again, all Business Connect advisors are here to help you. And then your bookkeeper and accountant should be across the other stimulus packages as well. So again, if you don't get the answer you need from one person, go to someone else. The one comment I got from a lot of people yesterday is that this stuff's really confusing and that it's making them feel really stupid. And it's like, it's not, this is complicated. They're not, if you feel like you're not grasping what's around, you're not alone, because all of us kind of feel like that. It's changed so rapidly that, I struggle to get my head around what's happened. Like, someone will tell me something, I'm like, oh, there's a change I didn't realize. So yeah, again, keep asking for advice, keep asking until you get your question answered. Okay. Because there's a lot of skating around the issues at the moment. And I think that's it from me, Jacqueline.
Thanks, Amy. I'll get you, if you could flick through to our final slide for me as well.
Oh, I'm sorry.
Yeah, no worries. And thank you so much, Amy. You're a wealth of knowledge on the subject, and it's such a pleasure to be able to do these webinars with you and have you have all the answers to these questions and to help everyone. So thank you so much for joining us on the webinar today, everybody. Courtney will send you a thank you email with any kind of further information, and also a link to the webinar, so you can watch it again. And as Amy said, business advice is currently, we've waived any out-of-pocket expenses, so all of our funded business advisory programs are free during COVID-19 lockdown, and all of our services are being delivered over Zoom or phone, so we have no face-to-face appointments, so to keep everyone safe and well during this time. So I invite you to reach out to speak to a business advisor. We have Amy, who's available for access to finance and to answer any further questions you have, or to go through anything along this kind of subject area. Amy is the wisest. But we also have so many business advisors in our team, and they specialize in various areas, really diverse areas. We've got marketing, we've got hospitality advisors, we've got we've got people that focus on business plans, and we've got general business advisors, and we've really got everything covered. So just reach out to Courtney. You can just reply back to her email, and we'd be happy to set you up with a business advisor if you do feel like you need some extra help outside of this webinar. So thanks again for joining us for this webinar on behalf of the Business Connect program. Thank you, Amy. Was there anything else you wanted to add?
No, I just wanted to say thank you for everyone for joining in today. So thank you all for your presence.
Okay, thank you. And we'll end it there. So thank you everyone for joining us.